This is the most efficient way to give to charity. It's not giving cash. Instead, it's donating stock, which gives you a huge benefit as well as the charity. I'll go through all the details here in a moment. My name is Merrill Taylor. I am a CPA. I've been working with clients for over 20 years, helping them save tens of thousands to millions in taxes through proactive tax strategies. So let's talk about stock donations. We have a lot of clients that will donate stocks to charity rather than donate cash. And there's a significant benefit in doing that, because the way that it works is that if you've held the stock for 1 year or longer, you then can get a significant benefit in donating that stock. Is what happens is the tax code, instead of giving you a deduction based on your basis in the stock, you get a deduction based on the fair market value of the stock, and you don't have to recognize any gain. So let's walk through an example. Let's say that you bought stock 3 years ago for $2,000, and it's now appreciated to $10,000. It's stock that's gone up significantly in value, has done really well. Now you have two options. Let's say you wanted to give $10,000 to charity. You could sell that stock for cash. So if you sold $10,000 of stock for cash, you'd get $10,000. But the problem is the sale of that stock generated $8,000 of gain that you now have to pay tax on, which would then give you less money to give to charity, because some of that cash that you received now has to go to pay taxes. Instead, if you just gave that stock to charity, the $10,000 of stock, the charity would get $10,000 stock, you would get a $10,000 deduction, and you don't have to recognize the income between the $2,000 that you paid for it and the $10,000 it's worth for. You get the best of both worlds, no gain recognition and a full deduction based on the fair market value. The charity then receives stock that's worth $10,000. They can then immediately sell that stock, and since they're a nonprofit, this only works for 501c3 nonprofit entities. Since they're a nonprofit entity, they don't have to recognize gain on that. And they get to keep the full $10,000. They don't have to recognize any gain or pay any tax. They get to keep the whole $10,000. So it's a way to give money to charity without having to recognize any gain on it. Now there is a limitation on how much of a deduction that you can get. When this happens, normally when you give cash to a charity, depending on the type of charity and the tax rules in effect at the time, you can generally deduct 50 to 60% of your adjusted gross income. So if your adjusted gross income is, say, $100,000 during the year, if you gave cash to charity, you could deduct anywhere from $50,000 to $60,000 of that donation. Stocks are subject to a much lower limit. It's only 30%. So if you made $100,000 during the year, you could gift up to $30,000 of stock to a charity and still get the full deduction, the full write-off. If you donated more than $30,000, the remainder or the additional would just carry over for 5 years. So let's say that you donated $50,000 to stock and your adjusted gross income was $100,000, you'd be able to deduct the $30,000, the 30% of your adjusted gross income. The remaining $20,000 would carry forward for 5 years. If you weren't able to use that carry forward in the next 5 years, it would be lost and you wouldn't get the deduction for it. So you want to donate. And this also needs to apply to appreciated stocks, right? If stock has gone down in value, it doesn't make any sense to donate that to charity because there's no inherent gain. It actually makes more sense to sell that stock and recognize the loss and then give the cash to charity, because that loss can help you offset perhaps other capital gain or perhaps some other income that's on your return. Now this applies, as we said, that it's the type of asset. It's publicly traded stocks, mutual funds, ETFs. If they're private shares, if this is a private shares in a company that requires more steps, you'd have to work through a process there. It has to be held for longer than 1 year to qualify, and it must go to a 501c3. Now, so how does it work? How would you do that? Well, first off, you would contact the charity and request their brokerage transfer information. You'd contact the charity and say, hey, I would like to make a stock donation. How do I go about doing that? And then they're going to give you the information. From there, you would then go to your your brokerage or your financial advisor and say, I would like to make a charitable donation to this charity using stock. Here's their brokerage information, and then your brokerage or financial advisor would then facilitate that transaction. The charity will receive the stock and provide a written acknowledgement to you of receiving that stock. That's very important. And then when you file your tax return, you're going to prepare a Form 8283 if your donation is over $500. The 8283 is a non-cash donation, and that's where that gets reported, and you put it on there. And so watch out again for these pitfalls. Do not sell the stock yourself and then donate. That triggers a gain. The deduction is based on the average of the high and the low on the transfer date. So what happens is the date that you transfer that stock to the charity, let's just pick a random date. Let's say it's June 15th. You would look up the stock information for that day on June 15th. You would find its high, and you'd find the stock's low on that date, and then you would take the average of the high and the low, and that is what is considered to be the fair market value and your deduction that you would get for that stock for that day. And so that's how donations of stock work to charities. It's a very powerful tool that a lot of our clients use to transfer stock and make charitable donations without having to pick up a bunch of capital gain and still getting cash over to the charity. If you would like continued updates, more updates on taxes, make sure to subscribe to our channel here. And you can also go to taxtutor.com and subscribe to our newsletter, and we'll send you out a weekly newsletter of tax updates.